Hey guys, Stock Saturday, and it's a slightly slower week. We've had sort of a few developments in the US, but nothing sort of drastically affecting the markets. We had tariffs obviously come down for China, and sort of some potential, deals. It's not deals, it's pauses and sort of promises that they're going to do a deal at some point, but yeah, the market seems to be loving all of this. Looking at the S&P up 2.6% in the last 5 days. It's quite a bit above, Liberation Day. Even obviously they were doing some tariffs even before Liberation Day, Canada and Mexico and people like that. But yeah, it's sort of even back up to February levels. So people are fairly happy, it seems, even though we have got more tariffs and sort of potentially worse other news across the board. Nasdaq loving it even more, 2.93%. That's kind of expected. It would be doing a bit better than the S&P. My portfolio is up 2.2% this week, so slightly worse than both, but nothing sort of too much. It's largely underperformance driven by gold and silver miners, and sort of a little bit of outperformance on the crypto side. Even with Bitcoin sort of not moving up particularly, just the miners seem to have been doing a little bit better. The sort of rest of the portfolio hasn't really moved all that much, really. No sort of particularly significant movers. Evolution still doing quite poor. Haven't added anything this week, and potentially some of this cash. Well, probably all of this cash could be coming out in the next few months. Unless something drastic changes due to a remortgage. Got my mortgage coming up in a few months and sort of getting quotes in. Don't really like what I'm seeing. Fees and rates and everything just incredibly high. I don't really owe all that much. So sort of between, the invest account, got a little bit in the Interactive Brokers account, got a little bit in the bank, got some premium bonds, and sort of add all of that up, and then probably would have to sell some stuff most likely in here, or the option side if things sort of do well in the next couple of months, and hopefully pay off the mortgage. So it does mean that I can't be sort of piling this cash into stocks, but we'll have to see. So yeah, up about 2.2%. But let's have a look at some news. So I didn't mention last week we did get some monthly revenue numbers from TSMC, and it's we can't work out whether this is sort of partly due to the tariffs and front running, because I mean their April numbers, 349 billion Taiwan dollars. So 48.1% up on last year. We obviously said the March number we sort of said was that strong numbers due to trying to beat the tariffs, importing, but I suppose April could be, they've imported a load of stuff and are now paying for it. It's not necessarily the front running tariffs revenue actually all comes in March. That could still be April. But sort of the longer this goes on, if we get a strong May number, even a strong June number, then I think you kind of have to put that to bed. Obviously, we've still got big tech saying that they're spending a fortune. CapEx numbers haven't really changed all that much. So yeah, an awful lot of that goes to TSMC, and an awful lot of that would come to an awful lot of that would go to Nvidia, rather, of that capex spend, and then a lot of that comes to TSMC. So a lot of revenue there not really affected. The rest, sort of, they have a quarter of their revenue as Apple. Haven't really seen a huge pullback in phones. So yeah, potentially this isn't going to suddenly fall due to extensive tariffs. So very good news, but an incredibly strong number for April. got a mid-month report for Hive. Sort of had their operational update last week, so not all that much has happened since then. But they have said that they've got to 8 exahash, which is kind of expected. I don't know if we're going to get, an update for every exahash. They said they're hoping to get to 11.5 by the end of June. But I thought the only sort of thing worthy of really putting this in the video was that they've sold an enormous amount of their Bitcoin. They sort of had said that they were selling some down to pay for sort of ongoing operations and the Paraguay expansion. And yeah, they have now done that in a big way. So they're down to 610 Bitcoin as of today. So as of May the 15th. And yeah, they were at sort of 2,000, I think 2,100 and sort of 2,600 not so long ago. So yeah, 2,000 Bitcoin gone. Obviously, they have to get their money from somewhere. They don't tend to, well, they hadn't been selling all that much of their Bitcoin, and with the share price where it is, they don't really want to do more dilution because that's just hitting shareholders, and borrowing straight debt at sort of 10% rates isn't really ideal and sort of harms the potential ongoing operations in the future if you start taking on too much debt at high rates. So selling Bitcoin at, $100,000 isn't the worst thing, really. Hopefully they can sort of make this back. It does make the balance sheet look a fair bit worse, but I'm not necessarily against this if it brings their efficiency down, joules per terahash down, and they get sort of an increased exahash without diluting, then that's not so bad. What I'm sort of liking Herein at the moment, and Herein have no Bitcoin at all. They just have an efficient fleet and a lot of exahash. So yeah, potentially a good move for Hive. So something I think is worth looking at, considering I've got sort of £250,000 invested in them, is having a look at Trading212's results. So not a holding, it's the broker I'm with. Something you get with smaller private companies in the UK is, late filing, of course. It's mid-May and they're filing 2024 results, not like most companies would be. And you get a very poor quality scan with, dots around everywhere and not exactly the most professional looking document, but it's the numbers that I suppose we're interested in, and don't the numbers look marvellous, to be honest? 2023 numbers, 104 million. This year they're up to 161 million. Looking rather nice. Gross profit, so they're basically saying they don't have any cost of goods sold. It's all, because they're a financial business, it's just administrative expenses. Some other operating income, but it's a fairly small amount. Obviously, most of this income does come from the CFD side, as far as I'm aware. They make a little bit on share lending and net interest and that sort of thing. But yeah, profits sort of before tax and interest and everything up from 36 million to 53. So that's very nice. They are obviously paying out an awful lot of interest now. So yeah, net interest is actually sort of slightly negative. I'm assuming this is the interest paid out to account holders, and yeah, it does look like people have been sort of worried about this, assuming that's what this is, that they're paying sort of too much. They're paying over base rate on the stocks and shares ISA. It does show that they're not in sort of UK money market funds. They're sort of in, global funds, and they might pay slightly more than base rate. But I just think they might be sort of happy to carry on this slightly higher payment, as almost part of the marketing budget. They do sort of mention that later on. They have quite a lot of marketing, and yeah, they do spend an awful lot acquiring customers, essentially. So sort of a couple of million maybe giving out to holders and customers wouldn't be the worst thing. And people will sort of tell a friend, oh, I make 4.6% on my cash at Trading212, and that could gain them a customer. So it is essentially customer acquisition costs. But yeah, profit before tax, they'll obviously pay a lot of tax because they're making a lot of profit. And net profit up from 30 million to 39.7. So incredibly strong, and that's about just under 25% net margin. So I did sort of joke in the Discord that I'm sure Free Trade have a good read of this every year, hoping that something goes wrong, CFDs sort of collapse or huge regulation, and so far it hasn't happened, and Free Trade obviously got bought out. It wasn't to be. Trading212 have, it seems, the stronger model. So coming over to Equinox Gold, and why sort of everyone was so unhappy with the results. Looking through, I can kind of see why. They've sort of obviously been saying for a while that things would be improving, costs would be coming down, and profits would be increasing, and that hasn't really happened all that much yet. Cash is down so they're showing from last quarter rather than this quarter last year. Cash is down quite a bit, 172 million from 239. Not sure whether whether the cash amount sort of includes some of the acquisition of Calibre. But yeah, that's not great to see. Non-current assets sort of obviously move with the amounts in the mines, and then debt is sort of increasing, which again I think part of this may be due to acquisition of Calibre costs. But they've been saying sort of deleveraging, they would be going heavy on deleveraging as Greenstone was sort of now ramping up and producing cash, and loans and borrowings is up 43 million in non-current debt, so that's not great. And current portion of loans and borrowings is slightly up as well. So debt up overall, where they said they were going to be quite heavily deleveraging. Again, whether this is just sort of we bought Calibre, so we're pushing out the deleveraging until next quarter, the quarter after, but then we'll be doing it even heavier, because Calibre do, to be fair, have a reasonably good balance sheet, not a lot of debt, so more cash flow to reduce not that much more debt. And then looking at the income statement, it's obviously up significantly on revenue, 423 million compared to 241 for 3 months for Q1 basically. So gold price up significantly, but operating expenses up significantly as well, 292 million, and an awful lot of depreciation. I haven't looked at their depreciation schedule, but I guess they're sort of hitting Greenstone with a fair amount, and other mines sort of not doing all that well. So before any other costs, we're looking at 33 million just in income from mine operations. Is up, it's triple what it was in same quarter last year, but I think we were expecting a lot more than that. And then care and maintenance, because they've shut down the Mexico mine, so that's essentially dead money. Hoping that they can sort of restart that mine or maybe sell it off to someone else. If you sell it while it's on care and maintenance, I guess you're going to get a pretty awful price. So what used to be sort of 180,000 ounce producing mine, you're going to sell for pennies really. So that's poor. Exploration isn't really a huge amount. General and administrative expense, guessing has gone up due to Greenstone. Need a bit more sort of people to operate a larger portfolio. And then obviously finance expense, they've borrowed a hell of a lot, so finance expense is up, so they need to get rid of that basically. And yeah, all of this comes to a net loss of 75 million. So, there's reasons for it, and things may be sort of improving in a few quarters as sort of things improve. Calibre deal goes through, and we start sort of deleveraging. But the sort of public aren't really going to look at that. They're going to look at sort of this is Q1, so an average of $2,800 per gold ounce, and yeah, they're going to say, Equinox is still making a net loss even with prices where they are, which, to be fair, they are. Operating expenses do eat into that revenue an awful lot. Yeah, this is partly what has increased debt as well. They borrowed 40 million, I believe, on the revolving credit facility to invest in 40 million of convertible notes issued by Calibre. So they don't really sort of explain this all that much, sort of investing in convertible notes in the company and then sort of buying the company outright. I'm not really sure sort of how those warrants will then work. It sort of potentially gets Equinox slightly better side of that deal, but why they would sort of issue so much in convertible warrants if they were shortly getting bought out. But yeah, a little bit strange. I think this is just a little bit of financial engineering, essentially. If you're, merging, buying the company in full, they should sort of receive that money back, essentially. But a little bit strange, and partly what had increased the debt. So hopefully that sort of gets resolved in the next quarter or two. Yes, and it is worth noting the first sort of year or two of Greenstone are sort of slightly hindered, sort of as part of buying it. They entered into sort of a couple of agreements to provide back some of the production at a certain price, so they're sort of producing, ever so slightly less for them and giving some back and sort of selling some back at a fairly poor price. Under the swap agreements, company will receive a weighted average price of $2,200 per ounce in exchange for paying the spot price of 34,000 ounces between March 2025 and September 2026. So a year and a half, but that is quite a bit of production to be producing 1,000, nearly over 1,000 sort of a little while ago, dollars underneath spot price. So not ideal, but after a year or so that is gone. Hopefully people will sort of look through this to the future, and yeah, things will improve a little bit, but it does provide a bit of a hindrance to to near-term prices. They also have some little bit of hedging, it looks like, gold collar contracts. I think they mentioned before that was sort of between 2,200 and 2,900. So yeah, we are above that sort of collar, if you like. So just coming over to their presentation, they have sort of acknowledged that this is this has meant results were poor. Cash cost of $1,769 per ounce isn't good at all, and then all-in sustaining cost of $2,065 per ounce for Q1. Again, they're obviously saying it was a particularly bad quarter, and things improve for the rest of the year, excluding Los Filos, the Mexico mine that they've shut. It's all-in sustaining cost of $1,979. Obviously, as I say, they've got some expenses for Los Filos with no production at all. So yeah, not ideal, and sort of produced 145,000 ounces of gold. That's quite low. So yeah, they are still saying things look pretty good for the rest of the year. The combined company 2025 guidance of 950,000 ounces, and hopefully 2026 1.2 million ounces. And they are still maintaining these these two guidance slides that they issued before. So yeah, the fully diluted shares admittedly has increased to 827 million because they were paying a little bit more for Calibre, sort of as part of an agreement. This was, I think, 800, just under 800 million before. But the combined company will be a little bit stronger on balance sheet. And yeah, that's where the production guidance comes from, sort of 950,000 midpoint of guidance, and sort of $1,500-ish all-in sustaining cost. On the Equinox side, that does seem, I don't know, possibly a little bit optimistic. They're saying this is sort of loaded on the back half. Half one all-in sustaining cost of 1,755. So if they've just done 2,065 for Q1 and we're already sort of halfway into Q2, I guess they must know something. Greenstone, ramping up a little bit more, very low all-in sustaining cost, but yeah, they we would need, I suppose, about $1,500 all-in sustaining cost for Q2 to average that out to 1,765, and then they're saying the second half of the year would average 1,335. So don't know. We've sort of got a history of Equinox disappointing shareholders. I wouldn't be surprised to see this maybe not come in, but I mean, if it gets, close to that, it's not the end of the world. And then I'm kind of focused on 2026 more than anything. So get some of this sort of bad news out of the way and sort of some more of the prepayments and royalties and things, and yeah, see where we go from there. That's why I've got my all of my options now in for January 2027. So we get all of 2026 to have some of this good news come about. So, looking at some economic news, UK came out with some job figures and unemployment numbers and stuff, all sort of looking relatively okay, I suppose. Employment, sort of non-farm payrolls, if you like, or, I guess this includes farming as well, but that was slightly worse than expected, but still positive. 112,000 jobs up on 3 months ago. All these sort of earnings figures looking better than expected. 5.5% average earnings increase for sort of last March, I guess that is. But unemployment up to 4.5%. That was expected, and this is March, so it's before the national insurance increases have gone in. So yeah, potentially that gets worse. I suppose people might have been laying some people off in advance. And then we got US CPI, so very, very important numbers, and pretty much all were, either in line or a little bit below expectations. So core CPI year on year was flat, admittedly. Some of the sort of reduction here in headline is due to oil, I would think, coming down. That sort of affects a lot of things. So headline inflation at 2.3%, very, very close to their 2% target, but Powell would say we focus on core PCE, of course, but some of it should feed through to that. Some out of date sort of Q1 UK GDP numbers, a little bit better than expected, to be fair. Jobless sort of claims for the US looking exactly the same. Continuing jobless claims came back down to 1.8 million, so that's quite good. They revised last month's slightly down as well, so yeah, a short blip up, and obviously this is weekly numbers, so it is fairly up to date, and tariffs sort of so far not having a huge effect. And yeah, that was about it for the news. So portfolio wise, as I say, gold and silver sort of coming down slightly, and Clean Spark, Riot, and Hive, Hive above $2. That has provided some help. Iron, they were sort of at in the mid fives, I think, high fives, now at $8.41. So that's quite a help. 38% up on them now, and Hive has gone back into the green. So not too bad. On the interactive brokers side, things sort of looking a little bit worse for wear. Obviously, with gold and silver coming down, Pan American have taken a huge hit and have entered into a new acquisition, which the market doesn't seem to have liked at all. I'm sort of digging into that, and we'll probably do that next week. And yeah, KGHM sort of not really moving anywhere. And on the option side, so yeah, Coeur mining sort of came down slightly, but not all that much really. Still enormously up from where it was. I think it was sort of 8,000 as a position 2 weeks ago, rocketed up to 20 and has only slightly pulled back. Equinox has pulled back a little bit more because their results weren't ideal and people were just sort of fairly unhappy with Equinox. And then, yeah, the crypto miners are sort of pushing on. Hive, not quite as much as I thought they would. That's even position has slightly increased. Herein, though, I think it was at 7,000 last week. So that's gone from a reasonable amount in the red to 31% green now. So pretty good. Himax sort of not really moving all that much, and Riot sort of moved up about 1,000, I think. These sort of are still a long way off my strike prices, so they really need a very strong Bitcoin move or an AI deal, essentially. Herein obviously could do with an AI deal as well. And then, yeah, little position in CleanSpark, sort of barely moved. So, yeah, £8,000 cash here. Some of this I haven't decided yet. I might put a little bit more into some of these options if the opportunity presents itself. Otherwise, I think most of this will be getting removed to pay off the mortgage. So, yeah, we'll have to see. Hopefully, sort of some of these increase a decent amount in the next few months, or in the next month even, and I could sort of take some profit and pay off the mortgage with that. But I'll have to see. So leave your thoughts in comments below, and like and subscribe. See you soon.